Good morning, ladies and gentlemen, and welcome to the show on this Wednesday, the 26th of January, 2022. Thank you for tuning in. Glad to have you guys here. You know, we assume a lot of things. Well, yes, it's true. There's a buildup of Russian troops on the near the borders of Ukraine. This is true. But you know what Russia said? Russia said that they have no plans on invading Ukraine. Now, there's an awful lot of talk out there about an invasion coming, imminent invasion. There's a lot of fear out there, and everything's fear. This is putting fear around the whole world, by the way. We got that situation going on, and we got the Fed. Now, we assume that the Fed is going to go out there and going to raise interest rates. They're even talking about quantitative tightening. And we assume that they're going to tighten everything and completely. But what have they really done so far? Well, they're making $120 billion a month worth of asset purchase that they've been making all along, called quantitative easing. They've already cut that by 30 billion a month. That's what they've done. So they're still doing 90 billion a month. Other than that, they've done nothing. And what has the Fed told you? The Fed has said data dependent. This is all data dependent. So, you know, we're making an assumption. I'm going to tell you guys what. When the market really turns down big, then that statement that the Fed made, data dependent, comes into action. This is a turnaround I've been talking about for a long time. A massive turnaround in the markets. And this is why you need to own gold and silver in your portfolio. This is also the reason why gold and silver are unlimited to the upside potential. Along with cryptocurrencies are unlimited to the upside potential too. Unlimited upside potential. You got a dollar that is losing value at an unprecedented rate and going into a hyperinflation, and you're trying to put a price on what gold and silver could go to? Not a chance. You can't put a price on it termed in dollars, because an awful lot of people out there don't realize the power of a hyperinflation, how powerful that is. When you're, I'll give you an example. In the Weimar Republic of Germany, there was a man, this is a story I heard, and I don't know how true it is, but there was stories like this that did happen during the Weimar Republic in Germany, during the Weimar hyperinflation. So this story, even though it might not be altogether 100% true, it echoes of stories that were true during that time period. What happened was a man went into a hotel in Germany before the Weimar hyperinflation. He was an American, you know, and the bellboy there working at the hotel, you know, parked his car and stuff and did a lot of stuff, you know, and they made friends a little bit. I guess they sat around the bar, you know, and the American liked him a lot, and gave him as a tip a gold coin, right? So what happened was that was a tip, and he kept it. It was like somebody, you know, nowadays giving you a $100 bill or something as a tip, maybe a bit bigger tip than that even, you know. So he kept the tip. The hyperinflation hit in the Weimar Republic, and he used that gold coin to purchase the whole hotel where he worked when the hyperinflation was on, because it's unlimited how high precious metals can go when the dollar's on its way to zero. What's a billion times zero is still zero, and the precious metals will retain their purchasing power during a situation like this. And, you know, cryptocurrencies is unlimited upside potential as well. And the dollar has unlimited downside potential if they're overprinting it. And you know what? If they bring out a CBDC, central bank digital currency, it's only going to accelerate this process. Because what are they going to use it for? UBI? And do they have an accountability as to how many units that they can create of these central bank digital currencies? And what's the first thing that they're going to do? If the Fed does pursue this policy, and if the markets really crash big, it could freeze the entire system. And then what do you think they're going to do? They're going to have to turn to something in order to try to, and the Fed's got, their balance sheet is just like over the moon. They can't bail out the entire system, I don't think. Now the IMF, they could bail out the system because they got a relatively low balance sheet with SDRs. That is one option. But a central bank digital currency is a third option. So they could release a central bank digital currency during a crisis situation that the Fed caused by this period of tightness. Because it could happen so fast because the system is over leveraged. And then what would happen? They're forced to go into a central bank digital currency. What would happen? Is that would start to road. They bail everything out with a central bank digital currency. What would happen? And the central bank digital currency is going to go on the exchanges against the decentralized cryptocurrencies. It wouldn't stand a chance. They used to, back in the early days, an awful lot of these new coins were coming out in the cryptocurrency space, and they used to call them, they used to have a derogatory term that they used to use for these, for one that they didn't like. Like if a coin come out and they didn't think it was going to go anywhere, and it wasn't going to do anything, it would go on the exchange, and the first day the price would go way up, and then a day later the price would drop like a stone to the floor against Bitcoin. Oh, you imagine CBDCs against Bitcoin? What are they going to do? Try to take the place of the stable coins that are out there now? That's all it's going to be, is a bleep bleep coin. What they used to call a bleep bleep coin. It's going to be a piece of garbage. Because they can't do anything but overprint it. Just like they've overprinted because this expansion of credit has to continue. It cannot contract. So I want you guys to think about that. When you're out there and you're able to purchase, still able to purchase, I'm going to say still able to purchase precious metals. And you're still able to get a hold of some cryptos. But precious metals, oh my goodness, Okay, one more thing I wanted to say. China and Russia over there, what if they did? What if something did happen and there was a Russian invasion or whatever, This would move us into a war footing worldwide. And China and Russia are together like they are trading partners. They are together in they both got socks and socks full of gold. China could have as much as 22,000 tons. And Russia could have nearly as much. So what do they got over here in the West? Well, we've shipped for years there, we shipped all of our gold east. Now, here's what I'm thinking. If they did go to war, it would be an extension of these trade wars that are already ongoing. There's a trade war on. Do you guys know that? You remember that? Well, it would be a trade war and a hot war. What would happen then? Well, everything, the gauntlets drop. They'll do anything that they can do to destroy the other side. Gold can be used as a financial tool of mass destruction. the ones who have a lot of gold could just say, hey, you know what? We're going to reprice it. We got the Shanghai Gold Exchange. We're just going to reprice gold. Oh, by the way, today gold's $5,000 an ounce. And we're buying all. Two big countries like China and Russia. How could the COMEX don't have enough gold to set the price? They have the gold. The ones who have the gold set the price. And what would that do to the Western financial system? That's why I say, and if you think this is a out on the limb sort of thing that could never happen, well, they've already done war games on it. They've already tested it. They've already realized that it can be used as a weapon of financial destruction. You know, and Jim Rickards talks about this in detail because he was involved in these war games. You know, they run it through computers and stuff, and they try to figure out what can we do to combat this, because this is a big potential threat to the financial system. Anyway, let's move on. Let's get the market started right here and take a look at what's going on out there today. We're looking at the silver price at $23.75. It's down 5 cents. What a bargain they've put on all this. This is a bargain that's lasted a long time. So people aren't really taking advantage of it because they think it's something normal. The price of gold and silver being this low, but it's only this low through manipulation by the big banks that are bullion traders. And they manipulated the price this low, and people are used to the price being this low, and they don't realize that this is a once-in-a-lifetime opportunity, even though it's lasting a long time, and there's a lot of negative sentiment out there. But when it's over, when this is over, people are going to look back and say, oh my gosh, oh, I should have bought some of that. Well, oh my gosh, while they're starving. You don't want to be one of those people. So you want to think of, and you don't have to go out and buy a big wheelbarrow full of this stuff. But if you haven't got any, you should start thinking about, hey, you know, maybe this month I'll buy a coin, a silver coin for myself, and put it away for myself. Maybe next month I'll buy another one, and start accumulating, even if it's slowly. Even if you don't have much money, just accumulate a little bit. Then you'll have it. And it'll give you a little bit more peace of mind, because it might be the only thing you can hang on to, because the central banks and the taxes and everything else are coming at you. They're stripping everything you have away from you. They're taking it. Anything of value that you can use to purchase a meal, they're taking it away from you. And you got a bank account, they could just come in and shut that thing down overnight if there's a big crash in the markets or whatever, and freezes the credit markets. All of a sudden you go to your bank and the doors are locked. Holiday, you know? But if you still got that piece of silver wrapped or your hand wrapped around it, they don't have it, you have it. That's called counterparty risk. There's no counterparty risk. It's something that you can own, and it's out of the system, and it's something that can purchase food. Because I'm telling you, what's coming right now is serious, guys. It's serious. The world's in big trouble right now. All of us are in big trouble. Say, hey, the pandemic's starting to drift away. Things are looking rosy. Things are not looking rosy because they're destabilized within the financial system. And that's a bigger problem than anything you could ever imagine, because everything in the world runs on money, or what we call money. And there's wherein the problem lies, because it's not really money. How do we get in this situation? A situation that the central banks can't get out of, a situation where the whole entire world could be adversely affected in an extremely negative way. How do we get in this situation? Well, it was back in 1913 was when it started, when they kind of pushed that thing through during Christmas time, and they got the Federal Reserve in there. They got it in there. I almost in my mind, this is my opinion only, they snuck it through. And once they got that thing in there, that thing has been a monster ever since. And Nixon helped it a lot in 1971 when he took us off the gold standard. He did a measurable help to this monster that was created on Jekyll Island. Anyway, 1830. Okay, let's take a look at crypto today. Crypto's up today a little bit. It was in the 1600s. It's in the 1700s today. So 1736. We're looking at $38,284 for a Bitcoin. It's still a lot of money for a Bitcoin, but this crash cycle that they're creating right now by the Fed, remember, it's data dependent and it can turn on a dime when the markets fall out of bed. And then it's unlimited how high all of these things can go, because that means the Fed is completely lost. They're completely out of ammo to fight inflation. And it's a total admission of that. Once that happens, right now, see, it hasn't happened. They're thinking the Fed's going to fight inflation, and they're making a deflation play. They're pulling money out of the stock market. That money doesn't go to money heaven. That money goes into cash. These guys are sitting on dry powder because they're anticipating what the Fed's going to do. But the Fed's told them they're data dependent. The Fed turns on a dime, then all of a sudden they're going to have to change their whole... these guys that are sitting and pulled money out and sitting on the money are going to have to say, hey, you know, we made a big mistake. This is not going to be deflation. This is going to be inflation. Quick, let's buy something that has no counterparty risk associated with it, like gold or silver. But Russia and China's got it all. Yeah, and they could reprice it. Quite seriously, if too much problems go on, you know, and this thing intensifies, the world gets more divided, they could make a move like that, which would be a financial move of mass destruction and reprice gold. It would be in their interest all of a sudden, because their gold reserves would be worth so much more measured against US dollars. You know? I think China's still got like $1 trillion worth of treasury bills. They could do a lot of madness with those too. To the treasury market. So they're holding an awful lot of cards that they haven't played. But the West is holding cards too and threatening to play them to try to contain Russia right now. Anyway, there's a lot going on. Trying to stay on top of it for you guys. Anyway, let's take a look at the markets today, and we're looking at a Dow Jones of 34,664. It's up 367 points. They're waiting for what the Fed's going to do. I want to see what the Fed's going to do, and that's what the markets are sitting there. And there's a lot of volatility, a lot of not knowing right now. The Fed's created a lot of confusion within the system amongst even veteran traders are just like scratching their head and saying, what's this going to be? It's starting to look like deflation. Let's make a deflation play. Okay, crude oil today, 87.36, and it's up $1.76, which is quite a big jump, 2%. Move index, 87.57, fairly stable, but slow, very slowly rising. Bonds and rates today, we're looking at the long end. We're looking at it falling a little bit. We're looking at a 10-year at 1.78. Just like I say, it's holding pat. It's holding stable. I told you guys when it had priced itself in. Said, hey, okay, it's priced itself in about a week or two ago. And didn't expect it to move until the next cut. Next cut, I expect it to start to move again. That's when they cut from 90 billion down to 60 billion. And that's coming soon now. I said they'd get away with the first cut. They more or less, they created some market volatility, but they more or less got away with it, like I said. I said they're not going to get away past the second cut. It's going to be more than market volatility once they do the second cut. And that's coming very soon. So then we're going to see these U.S. Treasuries start to creep up again higher, heading toward 2% on the 10-year, which stands at 1.78 today, and a 30-year at 2.11, and a US 20-year at 2.18. So we still have the inversion there between the 20 and 30 year. And we'll finish off the show taking a look at the US dollar index, which is creeping up today. Well, that's dollars being taken out of the system because these guys are bag holders of cash or dollars right now. They're keeping their powder dry. They're waiting for this deflation to come so they can. But it might not come because remember, data dependent. The Fed is data dependent, and they could turn 180 degrees overnight if the data doesn't come in that supports what they're trying to do. And it's not. It's going to be a sudden change, a sea change in this data that they're dependent on. That's going to say, hey, you know what? Policy error. Turn and go back to what you were doing before, or even more so. Then watch these markets explode when the Fed becomes dovish again. This could happen really, quite seriously, guys. This could happen overnight, and this would be the end because it would be, the world would know that the central banks can't stop printing at that point. I already know they can't stop printing. But they've put on such a good show for all of us. If they were poker players, you know, poker players can't show their face, they have to be careful, they have to be a good poker player. Maybe they don't have a good hand. And they're sitting there and they're acting like they got a good hand, and sometimes nobody calls their bluff. They can win a hand with nothing because they're a good poker player and they've just bluffed you. Well, that's what the Fed's doing. They're bluffing out there right now, big time, and they are damn good poker players. They got a straight face. They're able to bluff with a straight face. And once this bluff is called, and it's going to be called in, then at that point, it's game over. Everybody's going to know, and the world's going to know, and we're not going to see the dollar going up. We're going to see the dollar going down. We're going to see everything that you purchase go up. From beans to everything that you buy. Silver, everything is just going to explode through the roof. Once it's proven that they can't fight this inflation, that they're not going to be successful. I already know they can't be successful. The system's too over-leveraged to fight inflation right now. To me, it's a no-brainer, but the world out there is still waiting with bated breath, thinking that the Fed's going to be able to do this and stop the inflation. And, oh, my lands, what a situation. Anyway, thank you guys for watching my show, and we'll catch you guys in the next episode. Bye-bye.